The cryptocurrency market remains volatile, but recent data suggest XRP may be gathering renewed strength. As of late August 2025, XRP traded in the mid $2.80 south. For instance, on August 30th, it was around $2.83, down about 2 to 3% on the day and roughly 7 to 8% for the week. Despite this short-term pullback, XRP is still substantially above where it was 3 months ago, over 30% higher, indicating the broader trend has been upward. Importantly, a number of on-chain and technical indicators are flashing signs of a potential rebound. Large holders, known as whales, have notably reduced their selling behavior. CryptoQuant data show that transactions of 100,000 to 1 million XRP flowing into exchanges dropped by approximately 95% between August 26th and 30th, from roughly 45.6 million XRP to only 2.1 million. Inflows above 1 million XRP likewise plunged approximately 93% in the same period. Such a steep decline in whale transfer activity suggests that whales are sitting on the sidelines rather than offloading coins. In practical terms, this reduces immediate selling pressure. With whales showing patience, the underlying support for the XRP price grows stronger. In other words, while smaller traders have been quick to sell into any weakness, these big holders may be accumulating or simply holding, which historically can form the basis for a recovery. Indeed, the behavior of other on-chain metrics corroborates a potential market bottom. The taker-by-sell ratio, a measure of whether takers marketers are more on the buying or selling side, is currently below 1, about 0.90. A ratio under 1 indicates selling is outweighing buying, which at first glance seems bearish. However, market history suggests the opposite. During August, every time this ratio fell below 1, XRP soon found a local bottom and rallied afterward. For example, on August 2nd, the taker ratio dipped to 0.88. And over the subsequent weeks, XRP jumped nearly 20%. Again, on August 19th, another dip signaled a local bottom before a rebound. In the same vein, the current ratio near 0.90 might actually indicate that retail holders have capitulated, which could precede renewed buying. The divergence here is telling. Retail traders reflected in this metric have become negatively biased and largely sold out, while whales have held their nerve. Historically, such a divergence often lays the groundwork for a move higher. Technical chart indicators add further weight to this cautiously bullish case. The Relative Strength Index RSI for XRP is showing a classic bullish divergence. Between August 19th and 29th, XRP's price made a series of lower lows, but the RSI formed higher lows over the same period. This indicates that downward momentum was weakening, even as price dipped, a textbook sign that selling exhaustion may be near. In practical terms, divergence in RSI is often seen as an early signal of a trend reversal. Traders often note that when price is going down, but RSI is not making new lows, buyers may soon step in. From a pure price action standpoint, analysts are focusing on several key thresholds. The first immediate level of interest is around $2.84, a daily close above. This point could pave the way for a move toward roughly $2.95, and then the psychological $3.00 barrier. Breaking decisively above $3 would be a meaningful sign of strength. Beyond that, a critical breakout zone appears near $3.08, $3.20. One analysis highlights that clearing below 3.08, which aligns with the 50-day EMA and a Fibonacci level, could unlock a path toward $3.66, and potentially even $4 in fact. Some technical patterns like a falling wedge or triangle imply that once XRP convincingly breaches $3.08 to 3.10, higher targets up to $3.70 and beyond come into play. Conversely, if XRP fails to hold current support and falls decisively below roughly $2.72, the bullish thesis would be undermined. A break under $2.72 on the daily chart would signal that retail selling has overwhelmed whale support and could trigger a slide back toward the mid $2.60 south or below. In short, in the near term, XRP is caught in a tightening trading range. Watching those breakout points around $2.84 on the upside and $2.72, $2.80 on the downside will be key. Another important factor is institutional interest and regulatory developments. XRP's prospects have been buoyed by some recent legal clarity. In August 2025, the US SEC issued a favorable ruling classifying XRP as not an EXA-registered security for certain trading activities, effectively clearing the way for new investment vehicles. This decision unlocked billions in potential institutional funds, an estimated $7.1 billion that can now flow into XRP. Indeed, crypto asset flows show that money is moving. Reports indicate roughly $25 to 31 million have already entered XRP spot ETFs and investment products following the ruling. Whale investors seem to have taken notice as well. One notable data point is a single whale accumulation of over $60 million in XRP on the Upbit exchange. Additionally, inflows of large XRP amounts the same 100K1M bands suggest strategic accumulation even as overall exchange inflows have slowed. In combination, this suggests a shift from volatility-driven trading to more strategic positioning. Some analysts view this confluence regulatory tailwinds, institutional inflows, and deep-pocketed whales accumulating as placing XRP at a pivotal moment. In other words, if these forces persist, XRP could be poised for a significant upside move once the technical resistance is cleared. That said, there are also clear risks and opposing views to consider. Despite the bullish signals, XRP is not guaranteed to break higher. Trading volume around recent rallies has been relatively muted, implying caution. For example, as of late August, trading volume had dipped slightly even as price rose to about $3. Falling volume in a consolidation can sometimes warn of an impending volatility swing, but it also means any bullish run might lack strong conviction. Some analysts explicitly warn of a potential reversal if key levels do not hold. According to one forecast, if XRP fails to hold above $2.80 to $2.95, a deeper downturn could ensue, possibly dragging it back toward $2.40. In fact, technical analysis suggests a breakdown under certain supports could spell trouble. One chart-based warning notes that a daily or weekly close below roughly $2.95 might open the door to a slide toward $2.40. Traders often cite the lower Bollinger Band near $2.77 as short-term support. If that is lost, Coinpedia analysis suggests a drop to $2.60 is on the table. Thus, on the downside, there is a buy-thap floor around $2.75 to $2.80, but breaking through it could quickly escalate losses. Meanwhile, broader market and macro factors introduce additional uncertainty. The crypto sector as a whole has been sensitive to macroeconomic policy, geopolitical news, and shifting risk appetite. For example, strong correlation with equities means a general market sell-off could drag XRP down regardless of its own fundamentals. Likewise, any negative developments specific to Ripple Labs or the broader crypto regulation environment could spur selling. Even technical glitches or sudden whale moves could trigger whipsaws. Indeed, history teaches that cryptocurrency prices can reverse rapidly on surprise events. As one September outlook cautioned, while a crash is not certain, failing to maintain critical supports could lead to sharp corrections. That same analysis noted that negative headlines or declining demand could push XRP as low as the mid-$2.60 south, or even toward $2.40 in a worst case. Investors should therefore be aware of these risks. In addition, while whales have been patient so far, if they were to resume selling for profit or other reasons, the withdrawal of that support could nullify the bullish scenario. It's worth remembering that around July 2025, whales did unload part of their positions and caused a slump below $2.0. Oh, so the current GOM could yet be a precursor to renewed volatility if market psychology shifts. On balance, the situation looks like a classic tug-of-war between bulls and bears. On one side, the opportunity for upside is clear. On-chain and institutional signals are aligning positively. Whales have paused selling, meaning the major overhead supply is thinning, which could allow even modest buying to lift the price. Historical patterns and indicators hint that recent selling pressure may have already capitulated, setting the stage for a rebound. A move above $3 and even the key technical pivot around $3.08 to 3.2 would reinforce the case for further gains, possibly toward $3.50 for dollars. In fact, some analysts are eyeing targets in that zone or higher, especially if ETFs and institutional flows continue. On the other side, risks are tangible. Crypto market is still in a consolidation phase, and lack of momentum or negative catalysts could stall any bounce. Key resistance levels around $3.40, $3.66 are likely to cap upside unless a strong catalyst emerges, while failure of support below $2.80, $2.95 could spark steep declines. In conclusion, XRP sits at a crossroad. According to recent reports, if it can leverage the current whale support, it has a shot at cracking $3 and possibly challenging even higher targets. But if selling pressure returns, a drop to the mid-$2.60 south or lower cannot be ruled out. This mixed outlook means market participants should stay vigilant. Traders might watch the breakout levels $2.84, $3.08, and put protective stops in place, while longer-term investors should keep an eye on fundamental news like ETF flows or regulatory updates that could tip the balance. In the coming days, watching whale wallet moves, institutional flow data, and whether price holds current support will likely tell the tale. One thing is clear. Both bullish and bearish scenarios are plausible, and the path XRP takes will depend on which side gains dominance in this market standoff